what kind of multiples and valuation measures do you use to arrive at a target like that? I have the company, for instance, trading at close to 60 times expected earnings. And for a long time now, portfolio managers have been noting that that is sky high compared to the likes of Ford Motor, for instance, which is trading at 7 times multiple. Is that the right way to think of this stock or not?
I don't think so. Certainly, you're looking at the year 2024, presumably, right?
Yeah.
So I think the way to look at this company is its different piece parts, and you recognize that a lot of the businesses that they are in will really reach their maturity not anytime soon, probably the year 2035, in some cases the year 2040. When you look at it that basis, you see things like energy storage, like I said, is growing by 20-fold. That will be a significant source of value. Autonomy is another place where there's significant value. That's actually 80% of my valuation. Only 10% of my valuation is the actual car business. If you look at a Ford, that's basically what that business is, the kind of box with wheels, so to speak. I think the real value for Tesla has to do with its potential, not really what it's realized thus far.
Prize winner of today's session was Tesla. Nicole, kind of coming out of nowhere finally, after really stinking up the joint for a year plus.
Oh, you know, I actually was happy when I looked at the year to date and it was less than the 30% down for 2024. I mean, I don't know what to say. It's the worst. It's the worst performer in the S&P 500. A little brief moment here, a little hot spot, good thing. You have two big stories happening for Tesla. The first is that there have been reports about Italy showing interest in electric trucks. So electric truck production, what happens with that from the Italian government. And so that could be one of the reasons giving this one a boost today, coupled with the talk of more use of the self-driving technology, driver-assisted technology. This would move to full self-driving. That would be the linchpin for this valuation, and robo-taxis. And that's one of the reasons why everybody loved Tesla. It's not just because it's a vehicle, but because it has everything else, right, including full self-driving. And that was why people were putting $300 targets plus. It's at 177 today, but at least you got a little bit of a boost. But don't forget, BYD has had the slowest growth in 2 years, is doing an incredible job abroad. It's not even here on U.S. soil yet. The competitive landscape just continues to be really tough, and EV demand seems to be uneven.
No, that's very true. Well said. Good recap there. The other thing, too, is Tesla lost all its intraday gains. This was basically the overnight move that we wound up with. So,
have you ever wondered if Tesla will ever become a trillion-dollar company again? With the increasing competition in the EV market, constant news of slowing EV demand and the shift to hybrids, as well as the never-ending volatility of Tesla stock, how possible is it for Tesla to return to a trillion-dollar valuation? This might sound unlikely now, but this former Tesla director has revealed the roadmap for the company to be worth $1 trillion again. Listen to this.
Public company, at the risk of being accused of bias, and I have a large position in this company, so I'll say that up front. I think Tesla will be the next public company you see past $1 trillion enterprise value for artificial intelligence as an AI company, not as an EV company, but or a mobility company, but as an AI company, because people underestimate the impact of FSD version 12. When you use this product, you will see it drives like a human, and that will blow you away. And then at some point, you've seen videos of Optimus, and I think people sort of they undervalue or don't believe quite what's happening with Optimus when you see the videos, but I've actually seen the robot itself operate. It is extraordinary. And imagine when you have the most complex thing a human does is drive a car. So we have a model at Tesla that knows how to drive a car and does that well like a human. You have a robot that operates like a human. You put those things together, you get a humanoid-style robot that then you can deploy in a factory and get reinforcement learning. So that lock-in between data moat, which is unassailable, by the way, there's this unassailable data moat in humans driving a car, plus the lock-in of a robot working in a factory, doing all the things we do in a factory, right? What's the torque on the bolt? How do I not run into Gavin while I'm walking by him? Where's the bathroom? Whatever robots do, right? Those things are going to inform our training data by reinforcement learning of the robot itself. That will blow people away. And I think you'll see that, I don't know exactly when, but let's say in the next year or two, this will become more obvious, and it will accelerate the company. People will really see it as an AI company, which is what it is. That's my view.
AI and robotics.
Yes, and robotics.
Yes.
Yeah.
What attracts most people to Tesla is its incredible innovations and the uniqueness of its products. This, and many more, has placed the company in a position where it is able to pull massive demand for these products. From the robotaxi to the Cybertruck and even to Optimus, all these have proven that indeed Tesla is a leader when it comes to driving innovations. And now, the company is proving that it made great advances in its AI technologies, and that will be its path to $1 trillion valuation once again. So, if you're a Tesla fan and are looking out for the next big thing for Tesla, then be sure to stay on this video, as we're going to do a lowdown of why Tesla will become the next $1 trillion company in your portfolio. Let's get started.
Welcome back. Shares of Tesla are trending higher today. The automaker has been promoting one of its key technologies. Our guest has been following the stock closely. Let's bring in Tom Narayan, lead global autos equity analyst at RBC Capital Markets. Thank you very much for joining us, Tom. Any thoughts on why Tesla is up today? I'm seeing some headlines. None of them are terribly specific. They're referring to Elon Musk touting the technology capabilities of Tesla.
I mean, it'd be hard to say why specifically Tesla's up or down on a given day without any specific real news. I do know that, for the most part, this stock has obviously lost a lot of value, right, in the past few months, something like $250 billion of value. So just judging from inbounds that we've gotten from investors, I think there is a desire to understand if perhaps there is some upside here with the stock. What are the catalysts here? So it could just be some investors looking to perhaps call the bottom, but that's always really difficult to do with a company like this.
And you do think there's upside, if I understand correctly. We're looking at the share price now. It's at $179 and change. You have a price target more than $100 more than that. Your price target is $297 US. Take us behind your thinking there.
Yeah, certainly. I do think there's a lot of upside. Remember, we in the sell side, our job is to call out what we think the stock will be in the long term, not really day to day or month to month. So it certainly is going to be a challenged one. There's not a lot of near-term catalysts, but we do think there's a lot of untapped value here. One thing we would highlight, there's an energy storage business that nobody's talking about. It's very boring, maybe to some. We actually visited the facility a couple of weeks ago in California. Huge value there. Right now, the market is around 100 gigawatt hours of battery storage. It's going to be 20 times that when it's all said and done, and Tesla has 15% of this market. We think it'd be worth $100 to $200 billion of value. It's just one example of, I think, places where there's unlocked value, misunderstood value there at Tesla. We think longer term, this will bear fruit. It's just near term, it could be a little challenged because of everything going on with electric vehicles.
We all know Tesla is the king of electric cars, but lately the car maker has been making some serious waves in the world of artificial intelligence too. It's like Tesla is turning its cars into brainy machines, and even more, it is incorporating robots into our world. One of Tesla's biggest AI pushes is towards self-driving cars with autopilot and FSD, and it's no surprise how the automaker has been able to master this technology. The whole autopilot thing relies on super smart algorithms that can basically see the road and react like a human driver. And the cool part is that Tesla has a massive advantage because it already has millions of cars on the road which are constantly feeding data back to its mothership. Hello everyone and welcome back to Tesla Tomorrow. On the other hand, Tesla's FSD beta is a treasure trove of data that helps its AI get better at handling any situation on the road. Think of it as those driving lessons where you learn from experience, but on a massive, never-ending scale. This approach, called imitation learning, basically lets the AI learn from the way real people drive, constantly improving its own skills. Now it gets better because Tesla's AI ambitions don't stop at cars, as there's the Tesla bot, the humanoid robot that walked around and did some interesting yoga poses at its unveiling. Since Tesla's robot is still in development, many people watch its videos and fail to see the value in it, but it might actually be one of Tesla's strongest catalysts. The robotics market is estimated to be worth $45.85 billion this year and is expected to reach $95.93 billion by 2029, growing at a CAGR of 15.91%, according to a report by Mortar Intelligence. Tesla bull and future fund manager Gary Black said on X that he thinks production for Optimus will really pick up in 2026, and if this happens, Tesla would be in the perfect position to capitalize on the growth of the robotics market. Tesla has already made undeniable progress on its robot, and this points towards a future where AI isn't just in our cars, but potentially helping us in all sorts of ways. Before we continue, if you like this type of content, make sure to hit that like button, subscribe to our channel, and turn on notifications to stay up to date on everything happening with Tesla.
Shares of Tesla getting a boost in today's trade after CEO Elon Musk announced the company will offer a free trial of its driver assist tech to U.S. customers. Now, if you'll recall, Josh, this is the very technology that was part of the recall when you think about it. So, look, Tesla is in a very competitive space right now. They're also sort of really trying to compete at a time when customers are saying we don't necessarily want to shell out a lot of money for EVs because that first wave adoption has already happened. They are trying to provide these incentives. The question is that really what's keeping drivers away from Teslas if in fact they're not buying into it? You have to wonder, the cost calculation is still a really big one, even if you add additional incentives in there.
Yeah, although it is interesting, Kiko, hear Musk, and listen, we have Tesla bulls who will come on the show, and they'll pound the table on autonomous driving. I mean, you know that it's always one of their kind of like foundational arguments, why they're in the stock, why they kind of sort of justify the valuation, even though, as you know, for sure, recalls and also regulators, of course, carefully scrutinizing the software too.
Yeah, I mean, you have to wonder, is this something that Tesla wants to tout at this moment, given what has played out on the regulation side of things? But
when we talk of Tesla's AI, we also have to talk about robotaxis. Tesla announced its plan to bring a dedicated robotaxi with no steering wheel or pedals to market way back in 2022, but we don't know exactly when robotaxis will hit the market. Some predict that they'll hit the market in late 2024 or in 2025, and the latest prediction says 2030. Still, there's a lot of potential in them. Over the last 2 years, ARK Invest has laid out several price targets for Tesla stock based on robotaxis and full self-driving. In fact, it predicts that these two elements are expected to drive more than 60% of Tesla's value over the next 5 years. ARK's CEO Cathie Wood has also praised Tesla's advantage over rivals and the potential value of the company releasing an affordable $25,000 vehicle, which will help Tesla take market share from cheaper alternatives like BYD. There is no doubt that the robotaxi business will be huge for Tesla, and upon scaling, these cars will be cheaper and better, which will consequently drive up demand. Besides AI, there is another hidden catalyst for Tesla stock, and that is batteries. Latest reports have it that Tesla is now working with Chinese power battery giant CATL on battery technologies, particularly new electrochemical structures for faster charging. The idea is to develop faster charging batteries, since charging speed is one of the key determinants of user experience with electric vehicles.
The billionaire chairman of the world's biggest battery maker says the company is working on faster charging batteries for Tesla as the automaker tries to defend its market share and roll out a car for under $25,000. Now, in a wide-ranging interview, Robin Zhang, the chairman of the Chinese battery giant CATL, also told Bloomberg that the company is on track to license its technology to Ford at a plant in Michigan. Now, the project has attracted scrutiny and criticism from Republican lawmakers. Well, let's discuss all of this with Bloomberg's editor for Global Autos. He's the one and only Craig Trudell. Craig, it has to take an exclusive interview to get you on air, so I'm very happy about that. First of all, talk to us a little about what CATL is. So it's not seen as that friendly to, I guess, U.S. interests. So why is Tesla so close to it?
Yeah, I think CATL has become a sort of boogeyman in Washington, where Ford was trying to do this licensing deal where they would own the plant outright. They would essentially use equipment and technology from CATL, but they would own everything and control everything. And even that was not enough. And it became so politicized that you even had, the governor of Virginia refer to CATL as a Trojan horse, really sort of charged language. I think what's interesting to me from this interview is this idea of of just how close the chairman of CATL is with Elon Musk. And so while Ford has gotten a lot of heat in Washington for how close it is to CATL, it's not even nearly as close as Tesla has been with CATL.
But is that because Tesla also has gigafactories in China? And can they keep them separate?
I think it speaks to this idea as well of a sort of misunderstanding. There's been a sort of assumption that Tesla has been making its own batteries, which isn't exactly right. They've always relied on Panasonic in Nevada. They're highly reliant on CATL in China. The fact that they are starting to make some of their own batteries, but for the most part, they're highly reliant on suppliers. And I think the reliance on CATL in China in particular is something that's been really important because that plant has turned into an export center for Tesla globally.
But Craig, is it possible that lawmakers in the U.S. strike down on this?
I think there's absolutely a lot of skepticism being placed on that project in Michigan. I think there's even probably room for this to sort of grow in terms of the amount of attention on this company heading into election season with high-profile companies that politicians will relish the opportunity to get critical of this. And we're already seeing this. We're already seeing, the politicization of EVs, and this idea that, if we boost EVs in the U.S., are we just, essentially, helping China because they're so dominant of the supply chain?
But this isn't the only thing Tesla is collaborating with CATL on. In addition to making faster charging batteries, it was reported in 2023 that Tesla is looking to build a battery plant in the US with CATL's help in what would likely be a controversial arrangement, given the tense relations between the US and China. So, why does Tesla need a battery factory, and how will this new factory affect its EV production rate? Well, the reason is not far-fetched. Tesla wants to make lower-cost electric vehicles as part of its plan to fend off competitors. As you know, a cheaper car would be an effective way to entice new customers to Tesla. But to do this, the automaker needs to invest in low-cost, cutting-edge battery tech to see that vision through, as the most expensive part of EVs is batteries, since they often account for approximately 40% to 50% of the total vehicle cost, so reducing costs on them would help Tesla save a lot of money. It'll also help Tesla become closer to Elon Musk's goal to sell 20 million vehicles per year by the end of the decade. Tesla sold 1.8 million cars in 2023, but if it were to really produce 20 million vehicles by 2030, then one important aspect to focus on is batteries. This means that the automaker will need to get serious on bringing down the costs of batteries, as failure to do so risks ceding the market to hungry competitors. Batteries depend on a critical mix of metals, especially lithium. A great thing Tesla is doing right now is the switch to LFP batteries, which are made by a form of lithium that can be used to produce lower-cost, safer batteries. The company confirmed in 2022 that half of the vehicles it produces use LFP batteries, and most recently this year, Tesla started to offer LFP battery pack retrofits for those who own older Model 3 vehicles. Most established car makers work with suppliers for most of their components, as their supply chain has been created and honed over many years. This was their strength, but it also became their weakness when the supply chain disruptions left many in disarray. Tesla, on the other hand, prefers to build most of its components in-house, which explains why the car company was less affected by the chip shortages and other supply chain issues. With a good supply of batteries, Tesla has a better chance of reaching its 2030 production goal. And the interesting thing is, Tesla's EV business is already huge. Even Cathie Wood agrees that the car company does not need autonomous ride-hailing to be a success, since the EV opportunity alone is enormous. So think about Tesla's success with AI and autonomous driving. With these two elements factored in, what could possibly stop Tesla from becoming a $2 trillion company? Let us know your thoughts in the comment section, and don't forget to tell us what your valuation for Tesla is. If you would like to know what Tesla has been up to these past few days, go ahead and click on the next video on your screen. See you there.